Hello traders, welcome back to another video on our channel. In this video, I've collected information from various sources to share two highly effective price action strategies. Now, let's begin by looking at market structure and important levels. If we observe the current market scenario, it is in an uptrend with a slight downward movement, and we don't know what will happen next. If you look closely, we can identify a minor resistance zone at this point. After some time, the price reaches the minor resistance level, and it now becomes a major resistance level. At this major resistance level, multiple candles reacting to this point, indicating that the price has failed to break through it. Consequently, we come to the realization that we can consider taking a short trade position at this point. When it comes to price action, traders pay close attention to how the price of an asset behaves when it reaches important resistance levels. These levels are like barriers that the price has had trouble crossing recently. When the price gets close to one of these barriers, traders see it as expensive at that moment. This can make potential buyers hesitate, and as a result, there might be fewer chances to buy the asset. This situation can lead to the price either staying at the same level for a while or changing direction and moving in the opposite direction. In a downtrend, if we observe the current market scenario, it is in a downtrend with a slight upward movement, and we don't know what the market will do next. If we look here, we can draw a minor support zone at this point. After some time, if the price reaches the minor support level, it now becomes a major support level. At this major support level, we can see multiple candles reacting to this point, indicating that the price has found significant buying interest and has been supported from falling further. At that time, we come to the realization that we can consider taking a long trade position at this point. When it comes to the price action method, traders pay close attention to how the price of an asset behaves when it reaches important support levels. These levels act as strong buying zones that have halted the price from declining further in the recent past. When the price gets close to one of these support levels, traders see it as an attractive buying opportunity. This can make potential buyers more eager to enter the market, increasing the chances of the asset's price rising from that level. This situation can lead to the price either stabilizing for a while or changing direction and moving upwards. Let's look at another strategy that involves false breaks during trending in the market. We'll try to understand it. Suppose the market is in an uptrend, where it forms higher highs and higher lows as it moves forward. Next, it retraces to a support level and breaks it, but after some time, the price comes back above this level. In such a setup, we can take a trade according to the trend. Our stop loss will be around this level, and our target will be somewhere around here. Now, let's understand why we booked profits here and didn't go higher. First of all, this is our target structure, and secondly, sometimes the price goes up to this level and then comes back down from here. Let's see some examples. In this case, the market is in an uptrend. It is our previous resistance, which can become support. The price approaches this level and breaks it. After some time, the price comes back above this level. This means it's a false break setup. In the next candle, we can enter the trade here, and our stop loss will need to be placed right here. Also, we can book profits at another resistance zone according to our risk management. When the price didn't continue down after breaking the support here, it means there's less selling pressure. When the price closes above the support level with a green candle, it means there's buying activity that wants to take the price higher. Along with that, we are now in a long-term trend. Let's see another example. Here, the market is in a downtrend, and we have a key level that can act as resistance. The price approaches this level and breaks it. In the next few sessions, the price comes back below this level, meaning we have a false break setup. At the opening of the next candle, we can enter the short trade and place our stop loss here, and we can book our profits somewhere around here. All right, those are our two strategies. Thank you for watching. We hope you found this video helpful and learned something new. Please tell us in the comments what topics you'd like us to cover next. Don't forget to subscribe to our channel so you won't miss our future videos. Good luck with your stock journey and see you next time.